The RBI's Monetary Policy Committee believes that growth probably will get better and inflation will probably come down on an annual basis. And the educational skill sets that prevail right now, it seems to me that it will not be proper to miss that manufacturing bus and hang on to the services bus. Workforce in agriculture needs to be redeployed in other sectors of the economy. If you haven't done enough on manufacturing, then you will never be able to do enough on merchandise trade. Everything that what you said is right, but we haven't focused enough on skilling. That are we skilling our people in a way that they can get dignified, proper jobs? No, I don't think we have got that fix.
But what about man-made shocks? Have those hurt India's manufacturing ambitions? For example, demonetisation or the rollout of the GST.
The intention was unexceptionable. A good move to bring the country into a single tax regime.
Hello and welcome to Macro Matters, Business Standards Fortnightly podcast. I am Ankur Bhardwaj and we are recording on Thursday, August 6, 2026. 35 years after the economic reforms of 1991, one question continues to puzzle economists and policymakers alike. Why can't India crack manufacturing? Successive governments have tried to change that through reforms, Make in India, production-linked incentive schemes, and massive investments in infrastructure. Yet, manufacturing's share in India's economy is actually lower today than it was in 1991. At the same time, the latest manufacturing PMI has slipped to its weakest level in nearly 5 years. Private investment remains uneven, and the IT sector is no longer creating jobs at the pace it once did. So what is holding Indian manufacturing back? And what does that mean for jobs, investment, and India's long-term growth story? Joining me once again is A.K. Bhattacharya, one of India's foremost commentators on economics and public policy. AKB, welcome back to Macro Matters.
Thank you for having me here again.
AKB, let's start with the RBI. On Wednesday, the MPC's decision was announced by the RBI Governor, Sanjay Malhotra, and the MPC has decided to retain the repo rate at 5.25%, and it has retained a neutral stance. None of this was unexpected. Everybody expected them to hold the rate. Was there anything interesting that you found in the governor's statement?
Well, what was interesting was not what you said just now, that the RBI Monetary Policy Committee has retained its stance and retained the repo rate of 5.25%. What is interesting is that it has decided to look through the macroeconomic trends that will emerge in the coming months. What are those macroeconomic trends? Number one is the growth. Now, the RBI's Monetary Policy Committee believes that growth probably will get better and inflation will probably come down on an annual basis. Now, clearly, what is happening on the weather front, what is happening on the West Asian conflict front, or largely the geopolitical tensions, and what really happens on global trade, thanks to Mr. Trump's decision on what kind of duties he wants to impose on which country. Taken all this together, it does come to me as a bit of a surprise that the RBI Monetary Policy Committee decided to postpone a decision on whether it should want to take the evolving macroeconomic scenario and take necessary steps right now. Instead, they have decided to postpone it. And as many commentators have said, that probably you're not likely to see any change in the repo rates, which is the cost of money for the banking system, not before the first quarter of 2027. So it's a kind of a relief for the markets, in the sense that they know probably that RBI will not tinker with the rates in a hurry. It would like to see through the quarterly fluctuations in the growth projections and the inflation projections. Remember that inflation rate, according to RBI's Monetary Policy Committee, may go up close to 6% in one of the quarters that will come. So for me, the message is that the RBI has decided consciously to look through the turbulence or turmoil or changes in the state of the Indian economy vis-a-vis the global situation. That's, to my mind, is a big takeaway for this policy.
Another economic indicator that we found out this week was the manufacturing PMI. It was reported at 553.5 for the month of July, and this is the weakest it has been in nearly 5 years. To be fair, it is not contraction, it is still expanding, but the momentum has clearly shifted. Why does manufacturing continue to be in such a position? Is it just because of global uncertainty? Are there other reasons for it?
No, there are, of course, global uncertainty is one of the major factors, but it will be unwise of us not to look at what are the domestic factors that probably are constraining the manufacturing potential of the Indian economy. I don't think that we have got a proper fix on the manufacturing puzzle that the Indian economy offers. There have been, many noted economists in the past who have suggested that probably India has missed the manufacturing bus and it will probably be better off in hanging on to a value-added manufacturing or a little bit of services. But given the demographic profile and the educational skill sets that prevail right now, it seems to me that it will not be proper to miss that manufacturing bus and hang on to the services bus for two reasons. One is you have around 43 to 46%, going by different estimates, of your total workforce is in agriculture. And that agriculture is providing you a GDP contribution of around 16 to 18%. Now, this is clearly a workforce that is not very productive. With the adequate use of technology and land holdings being what they are, it's clear that a large chunk of that workforce in agriculture needs to be redeployed in other sectors of the economy. Now, that, to my mind, is a big challenge. That's number one. And number two, that if you haven't done enough on manufacturing, then you will never be able to do enough on merchandise trade. I'm talking about merchandise exports here, merchandise goods exports. If you look at the overall foreign trade scenario of India, what we see is that while merchandise goods exports are growing, and in the last few months they have grown at a healthy pace, but we should not be misled by such monthly fluctuations in these numbers. We should see the broad trend. What we see right now is that today our services exports are as much as our goods exports. Now, what does it mean? It essentially means that the upper leg of the K is probably doing better than the lower leg of the K, because in the manufacturing sector, you do need skilled, semi-skilled, at times even low-skilled employees to come and contribute to merchandise production, merchandise goods production, and their exports. Along with that has come the challenge from technology, with the kind of technology that is occupying the entire manufacturing value chain. You are going to see at the lower end of the job spectrum, you will see fewer jobs. You may get to see some job growth in the upper end, but you will not see that job growth in the lower end. So for India, manufacturing sector and reimagining manufacturing sector, see in what way we can actually help fuel our exports, see in what way we can redeploy our surplus labor in agriculture and provide meaningful jobs to the large number of people that are graduating every year. I think we need a proper fix on manufacturing.
What is interesting is the fact that since independence, manufacturing has had the undivided attention of the Indian government, successive Indian governments. It has received schemes, it has received slogans, it has received tax incentives, government attention, administrative support, infrastructural support, and yet it hasn't become the kind of growth engine that the Indian state has wanted it. Now, especially if we look at time series data since 1991, when the economy was liberalized, something appears a little counterintuitive. Since then, since 1991, in the last 35 years, capital is more readily available, infrastructure has improved considerably, taxation is simpler, technology is far more accessible, and yet, and also the Indian market in the Indian state is more well integrated with the global market, and yet, since 1991 till date, manufacturing share of GVA has actually declined instead of increasing.
You did not mention one very important factor in this. Everything that what you said is right, but we haven't focused enough on skilling. We haven't focused enough on the education as such, and a reflection of that is that what you see is different phases of dissatisfaction among the young today. That are we skilling our people in a way that they can get dignified, proper jobs? No, I don't think we have got that fix. Even if you look at the primary education and the secondary education, if you look at the various educational survey reports, SR reports in particular, you see that in terms of our ability to train a young mind to reach its potential, I think we have miserably failed. So I think as long as we have not been able to skill, reskill, and educate our youth to make them meaningful contributors to value addition in the manufacturing sector, I think this problem will continue to dog us. And this problem is going to bite us even more. That's because of the advent of technology. So it's not a challenge anymore. In my view, it has reached a crisis point.
So now that brings me to what probably is the central question of this discussion, the political economy. Has the Indian state actually been an enabler for manufacturing in India?
Well, I think there has been a lot of pronouncements, a lot of announcements of various policies. But I think there has been no consistent approach to promoting manufacturing in a sustained way. For example, what happened in 1991? We said that we will remove all the entry barriers. We will say that we will de-license. We said from 1991 to 2000, we saw de-reservation happening, which meant what? Which meant anybody who wants to produce something in any sector, even if it is reserved for the small guys, they can be able to produce that, manufacture that. So we removed the entry barriers. When it came to removing the exit barriers, I think we are a little slow. But that was not really was really bothering us. From 1991 to almost 2018, we saw a trend that we must make the Indian manufacturers access to cheap components easy. Now, by reducing the tariffs. Now, by reducing the tariffs, what you did was essentially you reduce the cost of production. You introduced competition among the domestic producers, But what you have seen from 2018 is that tariffs have seen a reverse journey of sorts. There have been some corrections in the last few years, but those corrections are not enough. Our average peak tariff is still higher than what they were used to be in 2014. So you have taken away one of the skills or one of the plus points of the entire MSME sector, which could access reasonably competitive priced raw materials and components for export production or supplying it in the domestic market. Instead, what we saw was the concept of a national champions coming in, wherein a few industrial houses were sort of chosen and they were expected to play a large role.
So the state is trying to pick winners here.
Pick winners there. So what was PLI? Production Linked Incentive Scheme. Production Linked Incentive Scheme was essentially saying that if you come and produce, and now it was all a question, it was not a non-discretionary rule-based system. It was you make an application, you come in, if you fulfill those norms, I will come and sit and decide what you want to be. And instead, what was the earlier policy? The earlier policy was, I will make sure that anybody who wants to get into the field of manufacturing X will have access to cheaper raw material and components through lower tariffs across the table. So the state was not coming into the picture. So the state started coming in. And mind you, this is not just an Indian phenomenon. Globally, this happened. Even in the US, industrial policy made its return. So the return of industrial policy has seen this kind of policy inventions, I would say. And that is, to my mind, a big challenge in today's environment.
We'll discuss these steps a little further down the line, but I want to circle back to the question of the state being an enabler for manufacturing, like it has been in South Korea, Japan, China, or Vietnam. There would be others on the manufacturer side of things who would argue that it has actually been an impediment. If you look at how manufacturing interacts with the state, there are taxes, permits, land rules, compliances for labor, environmental clearances, policy, import regulation, product standards. And here they would argue, the manufacturers would argue, that the state's purported strategic ambition is vastly different from its everyday conduct as far as manufacturing goes in this country. Isn't that more true?
Well, I don't think the state has been an impediment, but certainly states have not. And it is not just only the center, but even in the state governments that we see, they have not been able to create an environment where the manufacturing sector can play a meaningful role without many disruptions and obstructions. I mean, take for example the factor market reforms. We just now talked about the absence of exits. Now we, after almost 33 or 34 years after we introduced the reforms in 1991, we managed to get hold of a labor code which gave the freedom, limited freedom, to an employer to downsize or retrench its workforce under certain circumstances. Now, that to my mind is a very critical component in furthering and enhancing the kind of flexibility that you need for the manufacturing sector to prosper. Now, why is it that India's largest garment exporters have small units, not one large unit, to achieve economies of scale? Now, there is an excellent study that has been undertaken by a group of economists, which shows that there's one garment producer and exporter has 35 such units. Because to meet those labor standards and labor norms, they split the same unit into 35 different entities. Now, does it not add to your cost? Does it not undermine your competitiveness? Does it not even overall impact your export capabilities? So that's the labor side. The land side, there has been some relaxation of land acquisition laws. There are environment issues there. There are ownership norms issues. Some efforts have been made, but I don't think there has been a clear, purposeful intervention in relaxing and making the land rules a little more friendly towards the manufacturing sector. Take the ownership issues. Now, in the ownership issues, if you create a taxation framework where, or you plan to create a taxation framework where you want to say that if you are a foreign investor, then you get 15-year tax holiday. But if you are a domestic investor, you don't get that tax holiday. So the domestic investor might wonder that, does he have to be a foreign investor to take advantage of the tax laws, instead of realizing that it is not just the tax incentive, because our corporation tax rates are fairly competitive right now. Instead of realizing that it is not just the taxes which get more investment, particularly in the manufacturing sector, there are so many other issues like we discussed about land, labor, ease of doing business, getting permissions, or for that matter, take the great tax reform of indirect tax reform of GST. Now you have brought in on paper a single tax regime, but is it really a single tax regime on paper? In reality, you still have the companies dealing with two different kind of tax administrations, because you have got the SGST
And the CGST.
and the CGST. So I think we have made a lot of progress in making the manufacturing processes easier and less stressful. But if you want to compare it with your competing countries like Vietnam, then I think we have a little more distance to cover.
So let's look at the two major schemes or programs that have been launched in the last decade or decade and a half to try and improve manufacturing performance in the country. The first would be Make in India, and Make in India has had more than a 10-year run till now. I think it's fair time that we look at its performance. One of the purported aims of Make in India program was that manufacturing share of India's GDP has to increase to 25%. As we know, it's only 14% till now. The program tried to improve manufacturing in the country by making India market itself as a more attractive investment destination, asking foreigners to come and invest in India, trying to improve infrastructure, and also trying to improve India's ease of doing business rankings. Was it too optimistic in thinking that just becoming a more attractive investment destination would kickstart a manufacturing revolution in the country?
No, I think it was, I would say that it was incomplete understanding of the reality that prevails in India. If you want to launch a Make in India, at the same time, you are also raising tariffs. You will not be able to make in India while retaining the competitiveness, competitive edge in the global markets. So that was, to my mind, a contradiction. That if you want to have Make in India, then you also need a proper competitive environment through lower tariffs for those who come and produce and make in India, whether it is a foreign investor or domestic investor. That's number one. Number two is that if you are wanting more people to come to India and manufacture more goods and products, then you should also look at what kind of workforce that you are producing. Now, have you been able to train and skill your young labor force through proper IITs, not IITs, ITIs, industrial training institutes,
Polytechnics.
polytechnics. Now, till about a decade and a half ago, we used to train our ITIs young men with the carburetor technology and the auto thing, little realizing that the carburetor technology is dead. Now, the question is, one would like to go back to these ITIs and polytechnics to see to what extent the course curriculum has been updated. So I think we need an holistic approach to make sure that our workforces are trained, retrained, and skilled and reskilled.
The other scheme that the government has launched was the production linked incentive scheme. This is a more interventionist scheme. The government, instead of relying on, let's say, broad reforms, it's decided to say, I'll offer you certain incentives in certain pockets and you come and manufacture this. So there have been successes, of course. There have been successes in
Only
mobile.
one sector has done very well, which is the mobile phones.
And they could say that it was the arrival of Apple in the country which has led to this kind of boom in export of mobile phones. But isn't there a worry here that instead of fixing the entire plumbing, it is trying to fix certain pockets only?
I couldn't agree with you more on this. That the problem with PLI is that one, it is using the taxpayers' money to benefit or provide incentives to handpicked, select manufacturers, instead of creating entire ecosystem that is more competitive in its environment. And that too, PLI linked the advantages or the incentives to not value addition, but increase in their turnover. So whether you want to increase your turnover through a variety, you can increase your turnover in a variety of means. But if the conditions were that you need to add value to whatever you import, and then only you get the incentive, probably things were better. I understand that the PLI 2, which a lot of people are talking about, will have that condition of value addition domestically.
But instead of trying to fix those impediments which were preventing manufacturing boom in the country, it has made it more affordable to have those impediments for certain players with the help of PLI.
Yes, yeah, absolutely. I mean, take the classic case, the recent case of imposing a minimum import price on PVC resins. Now, the government, in its wisdom, has decided that PVC resins need some import restrictions because there are about 5 manufacturers who produce almost half of what the country needs. Now, PVC resins is used by and produced and used by a large number of MSMEs for irrigation equipment, water equipment, and everything, and infrastructure project requirements. Now, so suddenly, those handful of manufacturers have raised their prices because there is a minimum import price. So, in order so who benefited? Essentially, those domestic manufacturers who were occupying, one of them has a market share of more than 51%. And there may be some new bigger industries who are willing to invest in this sector because they see the minimum import price is a good protection.
Yes.
So you don't encourage investment or manufacturing sector by such interventionist policies. On the contrary, if you had done that, listen, if you want to operate and produce and supply goods to my ecosystem, then I will ensure that you get the benefits just like many others.
It was battery recycling rules, I think, which was a trigger.
Yeah.
So another major puzzle that seems to confound everybody is the private sector capex cycle. It is clear that public sector investment in infrastructure has increased substantially in the last decade plus. Bank balance sheets are much better now. Corporate earnings are in a healthier position, and yet the private capex cycle has been constantly weaker than it was expected to be. They've just not been able to kickstart that. Why is it so?
Because the private sector is I would say that financially very savvy. They realize that if you have made some profit, which they have, don't reinvest it as long as the capacity utilization level in these sectors is still hovering at around 75 or 77%. As long as the capacity utilization remains there, they don't want to use up their investable surpluses for investment to create fresh capacity. Because what is the point of creating fresh capacity which will remain idle? So instead of that, you have got an economy, a part of the economy which is doing very well, which is the stock market. So you start investing in various products and you probably earn as much interest and return as you would have done if you had invested the money in a project. So I think the structure of the economy is also a cause for concern at this point in time.
And at the same time, manufacturing costs are harder to recover. It takes longer to recover, and it's not easy to pivot immediately like you can do in a services company. For example, if COVID strikes, a services company can move its its workforce to work from home. A factory would probably find it harder, so it's probably easier, and
Absolutely.
and that is where probably the environment of
Yes.
not being very pro manufacturing comes in.
Yes.
So even companies like Mahindra would have a services arm in Tech Mahindra, or
Yes.
or Tatas have TCS and stuff. So
they're
also pulled towards services.
Services, absolutely. But the question is that if you do not invest enough in manufacturing, then willy-nilly your imports will increase. Now, if you have a tariff structure which makes your imports little more costly, you are essentially contributing to an enhanced cost structure in the domestic economy. And that does not make you very, very competitive in a global economy, global system, where global value chains are very important. So nobody will like to set up an industries or a manufacturing unit here to be as part of the global value chain, which is how Vietnam and China and many other countries have actually had done well by plugging themselves into these global value chains.
Economic shocks are a reality. Iran US war, nobody can control it.
Yeah.
Or the COVID pandemic, nobody could control it. But what about man-made shocks? Have those hurt India's manufacturing ambitions? For example, demonetization or the rollout of the GST. Did they hurt MSME in a disproportionate way?
Well, the manner in which the GST was introduced, probably the intention was unexceptionable. A good move to bring the country into a single tax regime, but the manner in which it was implemented was a kind of political bargains were struck of protecting the revenue stream of the states, and mid-course corrections were made by raising tariffs or reducing tariffs in some products just before the elections. So I think GST launch as well as the subsequent few years did see a lot of distortions. So that definitely hurt MSMEs in particular. Then came the demonetization that you referred to. Certainly the MSMEs were one of the biggest victims of demonetization. And they came out of demonetization, and then came the COVID. So you saw a series of shocks. You had the GST, well-intentioned move, but executed not too well. Demonetization, a bad move. It affected MSME sector and many other sectors also, but MSME in particular. And then came the COVID, over which the government did not have any role, but it did impact the MSME. So we have the last, let us say, 10, 12 years, what we have seen is from 2014 to 2022, you saw the play of these three developments that did impact your manufacturing sector. And by the time when the recovery, post-COVID recovery was happening, what you saw was the adverse impact of tariffs and the absence of skilling contributed to continued weaknesses in this sector. And because tariffs were raised, you could not export much. And since you could not export much, once again there was a kind of a vicious circle that was created. So that, in brief, is a sad story about India's manufacturing.
You know, India's domestic market is often presented as a major advantage. But there is a counterintuitive view that because this is a substantial, even if not the biggest domestic market, tariffs and other conditions imposed on any foreign competition makes it easier for Indian manufacturers to cater to just the small market, or let's say big by their estimates. And they do not focus on trying to export stuff, but just focus on this local market.
No, but this is a very myopic view. This is a very, very myopic view. If you follow that, that means you're going back in time. You're going back to the pre-1991 era. That is exactly the principle that was followed then. That you have a large market, you allow the domestic players to produce your goods. The story was that because the Birlas have been given the license to produce cars, Tatas will not be allowed to produce cars. And because Tatas were given the license to produce steel, Birlas will not be given the license to produce steel. So that kind of environment is not good at all for manufacturing sector.
But hasn't this how it has played out in the last 5-10 years as well? Because you have steep tariffs, so foreign competition isn't really coming in. The same product gets made, and you only basically manufacture for this large market in India instead of trying to manufacture for the world.
What has happened is that instead of licensing being brought back, what you have seen is the idea of the national champions have gained ground. And today you have maybe a handful of large industrial houses which are expanding, setting up new projects. There are groups that, even if a regulatory requirement will not allow a producer of infrastructure, let's say somebody is offering an infrastructure sector. Now the issue here is that would you allow every manufacturer, if you were allowed every manufacturer to come in and play the market and take advantage of the market, you would have seen a different compositional change of your Sensex and Nifty. If you take Sensex, the way the churn that happened in the Sensex from 1991 to 2000, and from 2000 to 2026, you will see that the churn the pace of the churn has declined substantially. That means that there aren't too many new players and coming into that group of 30 top companies, service providers and manufacturers. So that is a clear sign that India has not allowed, if I may use that expression, 1,000 flowers to bloom.
So in comparison to India, let's take the example of Vietnam. In the last 5 years, China plus one policy has been talked about a lot. India hasn't really benefited from the China plus one strategy that we said the global...
Except Apple. I think Apple we have, yeah.
But Apple has also moved some production to Vietnam.
Yes, that's right.
So why has this happened? What can we learn from Vietnam's example? And at the same time, Is import substitution still the mantra in this country instead of
No,
export
I
orientation?
think what we can learn from Vietnam is that you need to skill your people. What we learn from Vietnam is that quality is a concept that cannot be compromised at any cost. You will be surprised to know that we are a major shrimp exporter, and our shrimps, before they are exported to the US or Europe, actually are sent to Vietnam for cleaning up and processing. Then it comes back to us, and then we export it, because we have not developed the skills to process and make it acceptable in those developed markets from a health and hygiene point of view. So I think both skilling as well as quality consciousness are the two lessons that I will learn from Vietnam.
I'll ask you a straight question. 35 years after economic liberalization, why can't India crack manufacturing?
Let me say that two reasons. One, we focused less on primary and secondary education, which would have produced more skilled people for the manufacturing sector. And number two is that we did not dismantle the protective tariff structure fast enough. And even when we did it after 1991, we seem to have regressed a bit on that front.
AKB, manufacturing is often the bridge between rapid economic growth and widespread employment. This has been the example globally. India never built that bridge. What has been the result is that certain other sectors, the service sector, for example, has stolen the march. So, IT industry in particular has employed millions in the last 35 years. It has been probably the only path outside of the government service to upward mobility. And now that particular bridge, the IT services bridge, is creaking under pressure because of various technological advances. What becomes of employment now?
Well, I think there will be a challenge for employment because of this development, particularly in the IT services. The low-level jobs will certainly be under pressure. I am not worried about the higher-end jobs, even in the IT sector. Certainly, a large number of Indians who graduate as techies or software, they need to train and retrain themselves, because I don't think jobs will completely disappear, but jobs will undergo a significant change, and you have to be ready to acquire those new skills and new tools. So therefore, yes, there would be a pressure on the job market, but we need to be prepared, and which is why I said that there has to be renewed emphasis on the need for training and education.
Doesn't it create a particularly major problem for educated youth in the country? For example, with an expanding economy, access to good education, colleges, universities, professional education is increased, but the same educated upper middle class now finds there is a structural shortage of good jobs. So it's probably not just a temporary phenomenon.
I think it's a very, very serious issue, because culturally we do see that in India in particular, although we say we have a great and entrepreneurial nation, people are by and large are more comfortable in a salaried end of the month check jobs. But at the same time, I do see a change in that culture among younger people who are probably want to be themselves. They may not be at the beck and call of 10 to 5 jobs on a daily basis, 6 days a week, 24 days a month. So culturally, we are probably we may see a transformation, but we may not see. If we don't see a transformation, then I think there's a major challenge. Uh, at another level, what I do find very interesting is that our failure to create manufacturing sector an attractive destination for jobs is going to be a big cost, because what has happened for the last several decades, we have created a generation of young people who probably are better off, and they feel better off in working in a better environment rather than in the shop floor level, because we have not made the shop floor very attractive place to work. I remember the Singapore experiment there. I mean, Singapore had this problem of climate, and they made air conditioning a part and parcel of their lifestyle. Now, what stops us from making the factory, the shop floor levels, a little more easier place to work and breathe? And I don't think our factory shop floors in India particularly are very attractive places where a young Indian would like to work. A young Indian probably feels better off driving an air-conditioned car rather than working in a factory. Now that is also a challenge, and that challenge can be met if you focus more on creating better working conditions for the manufacturing sector.
Yeah, since 1991, we've also seen the public sector take a backseat as far as employment generation is concerned. So there are fewer opportunities of working in the government side of things or public sector undertakings, for example. Uh, as the private sector declines or the opportunities decline, the number of opportunities, are we going to see even more intense competition for government jobs?
I think the competition is going to be more intense. Public sector jobs are fewer. Government jobs are even more fewer. So I think there is going to be a problem on that score, and I'm not at all. This is going to be a big challenge.
Often the term elite is not necessarily just for the wealthy, but also elite could be people who have had access to high quality education, who have certain credentials, have certain job opportunities. And this elite in this country has had some sort of a traditional bargain in the last 70, 80 years. You study hard, you earn a degree, you earn a job, you enter a stable profession, and you build a decent middle class life. This pathway seems to be under stress now.
No, I don't think, I'm not that pessimistic on this front. I think the elite of India will probably find a way out of the situation. I'm not worried about the elite. I'm worried about the middle India, the low India, if I may use that expression, where the real challenges will become a real problem. The elite will find a way out of either in a different market, in a different country. They will find their way out. This is a problem that is facing the middle India, and I am not fully convinced that what happened in Jantar Mantar is only the elite. It may have been led by the elite, but what they were capturing was the angst and the anguish of middle India.
If manufacturing isn't creating enough jobs and if IT isn't hiring like before, where will young India work?
Little bit of, I think we have to see entrepreneurship. We have to look at diversified agriculture. and services sector in India is still growing at a decent pace. And the services sector, I would include even in the retail sector is a growing space. So there will be different kind of jobs in the retail sector, the consumer segment particularly. So I'm saying that yes, jobs will be a problem. Good jobs will be a problem. Uh, but if you don't fix those basic shortcomings in terms of skilling, in terms of making manufacturing jobs a little more attractive, and a policy ecosystem where import restrictions are a little relaxed, I think if we don't do all these things, we live in a bit of a problem.
You can sense that the economy is kind of transforming in certain ways by looking at some data. And two very interesting reports recently point to that. For example, one is a report by Sunena Chadha for businessstandard.com. It looks at clear tax data, and it shows that people who report salary as the primary source of income, a lot of them are now also reporting capital gains as another source of income or freelance income and stuff like that. And the number of taxpayers, according to clear tax data, who reported salary as their primary source of income is probably for the first time less than 50%. This was for businessstandard.com. There is another report by Roshan Kishore for Hindustan Times. Here he looks at a different strata, people who are worth more than 100 crore or, and this class now reports a higher stream of income from rentier incomes, as they're called, rather than from business or industrial sales and stuff like that. This points to a kind of a movement towards rentier or the market kind of growth or financial markets?
No, I think both the reports are actually presenting an India, or a similar India. The kind of India that we talked about at the beginning, which is an India which is seeing a K-shaped India where the upper leg is moving in a certain direction and the lower leg in a different direction. Please remember that even though the 100 crore, 100
Wealth.
People. Now, this income tax paying population in our country for the current assessment year, the returns number is around 55 million, which is essentially 5.5 crore. India has a population of around 145 crore. Now, the 145 crore, 5.5 crore, we are talking about a tiny portion of India's population, and it is the composition that has changed that you refer to is a very significant trend, that they are declaring more capital gains, they are declaring more business income, especially among the youngsters. And even among the senior citizens, they are declaring more capital gains, which means they are into stock market, they are into the financialization of the economy. So it is that 55 million people in this country, in a country which has got 1.4 billion people. That small, tiny population is seeing this kind of, increased reliance. The interesting thing is this data is from 2022, 23 and 2025, 26. This change that you see is a very sharp change. It is a post-COVID phenomenon. I think it's sociologically, it's a very, very important trend where how that small segment of India's population is increasingly becoming more and more dependent on the financialized economy instead of their actual salary. If you pay more by way of taxes on your financial gains rather than your business gains or on your salaries, then there is something that has happened, something that has changed. I think it requires deeper study. It's a major trend change in India's economy.
The HT study or the HT report actually points to a more structural change. usually the adage is that the higher the risk, the higher the return. Here they seem to be saying that instead of putting my money into an industry or a business, it would be easier or maybe even more lucrative to put my money in the financial markets and make money instead of taking whatever risk I might have had to take because of whatever reasons. And this is also supported by certain anecdotes that you and I have heard or have been reported, that the young generation of old Indian industrial families
Yeah.
are not really interested in running their businesses anymore and just want to focus on family offices and investments and stuff.
Absolutely,
So,
absolutely. This is a part of a larger trend where you realize that probably it makes more sense to use investments income as a route rather than launching a new company or setting up a new project. There are too many hassles if you want to set up a company and produce utensils or some such thing. But investing in a stock or investing in gold or silver and make that extra buck probably is liked by too many of our youngsters and large number of population.
but I'm not complaining about financialization. It's great. Companies can access cheap
No,
capital this
it
way.
is not necessarily great. It has
No,
got
no.
a it
In
has got a
generally,
pitfall.
generally, it is considered to be a positive for the economy.
Yeah.
That this is how companies or entrepreneurs can access cheaper capital instead of taking bank credit, etc. And people can access certain financial resources. But that's fine. But at this stage of India's growth, with the per capita income of 2,800, if more money is not flowing into industry and businesses, are we going to be able to use this capital
That is
for
the
employment
problem.
generation?
That is the problem. That if this money is not used to set up new businesses, new manufacturing units, the government has done its bit by putting a lot of money in infrastructure creation, but that is only one part of it. You need the private sector or the public sector to come and set up more manufacturing sector units to absorb the large number of people who will come out and ask for jobs. So I think that's the real challenge. Instead of a good chunk of the moneyed class in India investing in these stocks and financial instruments.
So, isn't India running the risk of financialization before a broad industrialization or broad manufacturing base?
I think the financialization trend is right now, as I said, that it covers only a tiny proportion of India's population. Let's hope that it doesn't spread. I think before it spreads, we need to take necessary corrective steps to create more jobs through more manufacturing units, more enterprises, rather than allowing our entrepreneurs to rely on their capital gains from the stock market.
How does it change the composition of India's elite or the creamy layer, as you might call it? Do you remember the time then when the really rich people in this country were called industrialists? These days they are called businessmen.
Well, I mean, you summed it up very well. I think there aren't too many new industrialists that are on display right now. There are many businessmen, but the question is that it is a public policy debate that why is it that we are not seeing more businessmen getting into industries? I think that's a real policy question. That why is it that we don't find businessmen instead of being lured away to managing their family offices, they are attracted to setting up industries and units.
So we'll probably have impressive wealth creation at the top of the pyramid, while the bottom of the pyramid seems to be struggling at this point in time.
Well, this cannot go on for long. You will have to policy intervention should take place, and if it doesn't take place, we may have bigger problems to face.
Is this a result of India's failure to industrialize and become a manufacturing powerhouse, or is this one of the reasons that could lead to India not even becoming a manufacturing
It
powerhouse
is
in the
not
future?
not just those reasons. I think there is a combination of factors right now. The globally also, US, we are not the only country which is seeing this trend. Globally also, you see similar trends. So technology has played its role. So it's a complex situation right now.
So it could be just last question. Over the next 5 years, what are the three broad structural changes that you would want to see the Indian government take? Not schemes, but three broad structural changes that can improve the future.
Bring manufacturing back on the center stage. Ensure that skilling and education is of the top order. I mean, don't just undertake examination system reforms, but undertake education reforms in a way that education and skilling becomes the top priority. And third, let this country be an open economy where the efficient and competitive producers of goods and services do not have any undue advantage over the others.
AKB, thank you for joining us. And thank you for watching. India has spent decades trying to turn manufacturing into a major engine of growth. There have been important gains, but not yet the broad industrial transformation policymakers have repeatedly sought. That matters not only for factories or exports, it matters for private investment, productive employment, and the kind of economy India is becoming. The question is not whether India should abandon services or financial markets. It is whether a country of India's size and stage of development can achieve broad-based prosperity without making far more of the things it consumes and sells to the world. I am Ankur Bhardwaj. Thank you for watching, and we'll see you in 2 weeks on Macro Matters.